Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.
Welcome to Stockwatch with me, Simon Brown. Joining me to unpack your stock-related questions today, Louw, PSG Wealth Old Oak, and David Shapiro, Sasfin Securities. Be sure to send your questions via email stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV, #Stockwatch. Gentlemen, appreciate the time. So let's start with yesterday's story, but it's still kind of today's story. David, Optasia, a bit of a lack, although Jean-Pierre Verster last night was saying, hey, the stock was up 2% in a down 2% market. He wasn't wrong, but I thought we would get more bubble, more pop. Does this give us opportunity?
I'm disappointed. It just I can't really read it because I thought we're so starved for new listings that there'd be a lot of punters out there who wanted to pick up the stock. I think the story's good. The fact that First Rand went and accumulated such a large parcel shows you that there must be some merit in it. I think this is the new banking. And I must say I was very surprised, at just almost a very lackluster debut. So whether it's going to come or whether they're controlling it, I'm not sure. Whether institutions are buying slowly. But I also hope it's not an indication of the mood. I don't know, Shalk, maybe it's too expensive for the punters. It's a highly priced share. They only like things that are 10 cents and more. But I must admit, I thought this would pop over 20, 21, 22 Rand a share. But anyway, but it's a good business. Nice business.
It got to 2084 yesterday. I mean, that was nice-ish. Skulk, does this give me, because I got bad allocation, I think I got 14%. Does this give me a second chance to up my allocation?
Yeah, I think the people, after our previous conversation, David, I think you mentioned the word stag. And I think a few younger people went and Googled the word. What does David mean with the word stagged? I think it just got stagged, baby. So you only got 40 or 50%. So I know more or less where there was some tweets that I saw today, and most of the let's call it local allocations got about 7% of their allocations. What do we call it? Institutions got around about 14 or 15% of what they applied for, and good old easy equities. I think they got about 60%, so maybe they to blame for putting some price pressure on it. No, I'm just joking. I mean, it's like David said, it's a great company. It's got all the right buzzwords: AI, fintech. It's got all the right backing. I mean, Michael Jordan yesterday. I actually need to find that tweet. That was actually a stunning tweet where we actually mentioned, how many, while we were doing the listing, how many accounts per second Optasia opened in that time. I mean, it's just crazy. It's got the right buzzwords, and you mention it. I mean, FNB taking a 20%, over 20% bite of this Optasia cherry. It's sort of a full circle because we know Michael Jordan's been the CEO of FNB in his previous life, so maybe they've got some insights. But the one thing that I've learned, a company that buys 20% of another company, they usually don't stop there. So that's just something I would say. Just monitor it.
Okay.
When I read this prospectus and I looked at their business partners, they were talking about the business partners in terms of MTN and Vodacom, and then also the business partners on the banking side from FNB, Standard Bank. My first reaction was, looks like such a great model. I would not be surprised if their own business partners it takes up a bigger interest than just having a few shares in the company. And we've seen the first move done by FNB. Just put this on your radar. It's an expensive company, but it could be a fun one to monitor.
I take your point, because with respect to FNBs and standard banks, they can't compete in this. They can't do the microloans, so they just buy a stake. And you know what, maybe everyone, so there's a company listed called Stag Industrial. Maybe that's where everyone went last week and bought completely the wrong stock. It's a head office in Boston. I have no idea what it does. David, I want to take to your point, which, and maybe I'm reading too much into it. This market, are you worried about our market heading into the last few months? We've had a spectacular year, local and offshore.
No, it needs a break. And yesterday, Morgan Stanley, Goldman Sachs at some conference have been repeating a message. I say repeating because this message is not the first time that they've said it. We've just run too far too fast. And I think the market just had to digest how far we've come. But I don't see, it's almost the media wishing this to fall, but I don't see massive selling pressure coming through. And, even looking at it last night with the big sell-off and the big headlines, so it retracted, a few points. I don't think there's a catalyst to send it down. There's nothing. And, Michael Burry, what's his name? They started to quote, he was the chap who went short during the subprime crisis, 07, 08, and he's like, I call him, he's like Michael Bublé. They bring out Michael Bublé at Christmas time. He comes out of the cave and he sings Christmas songs. And this is the equivalent, whenever there's a little bit of a bear squeeze or the market comes down, they bring out Michael Burry, to find out what he's doing in his short Palantir and his short Nvidia. I say, okay, yawn. I don't want to buy yet. I must admit, while this is happening, but I'm not frightened. I'm not doing anything for clients.
Skulk, we were saying before we got on air, and we've talked the numbers before, our local market rally has been gold driven. Our risk here is gold. As gold holds, broadly our market's happy. And if it doesn't, well, then it's not. And there's a lot of value, and there's the banks and the retailers and the like, but it's been a gold story, and that's perhaps the risk to local markets.
Yeah, what was interesting about yesterday, and we often ask the question, is markets too high? Are we going to see a crash anytime soon? When are we going to see the retracement? It's got crystal balls as murky as yours. But the one thing that I found interesting about yesterday, I actually made the comment yesterday that I don't know if I mentioned the song Dem Bones, Simon. Do you know the song?
Yeah.
So it's a nursery song for listeners out there, and it's something about the hip bone connected to the backbone, and the backbone connected to the neck bone, and neck bone connected. And yesterday, while everything was playing out in the market, I sort of just saw everything being connected again. Because up to about 2-3 weeks ago, if you had the ISM manufacturing data that came out, and just for those who missed it, we not only had 8 consecutive retraction in the manufacturing index in the US, but we've also seen it dip below the 50 mark for the first time, which just means that they're actually now contracting. Above 50 means they're growing, and below 50, and that's bad, because we know Powell a few weeks ago came out and said, well, the economy is looking sort of so-so, but he's really worried about the labor market. So if you see worries in the labor market, and you're seeing the manufacturing and seeing the services, that could really spill over to a bit of a, let's call it a worrying economy. And with companies being priced for perfection, I know people will tell me, come on, Skulk, we're not looking at the .com levels yet. But it's still, looking at elevated levels. If we see economy that's not doing well, these, let's call it high levels, will have a few question marks. I think the one thing that stood out for me yesterday, why it stood out for me, is up to about 3 or 4 weeks ago, if we had bad economic data, we would have seen the dollar weaken, and we would have seen gold run from $3,000 to $4,000. That's pretty much a typical day 3 weeks ago. But yesterday, what we've seen is the moment this data got released, you suddenly saw a massive sell-off in emerging markets. Most of the emerging market currencies weakened. We've seen the markets weakened. And then where did the money go? Well, there went the dollar. The dollar actually improved. So we're back to let's call it a more normalized type of market, which will be interesting, looking towards the end of the year, because I think if economic data improves, that's fine. If economic data sort of goes weaker and weaker for the next 2 months, I think we're in for a volatile latter part of, let's call it, final 2 months.
Okay. And you're the first person to sing on air on the station, I suspect. But
Won't be the last.
let's look at the blue labeled Cell-C. This has been on the radar for a long time. We got a sense today. I got to say, I read it twice. It was brain dense. What I was looking for was just give me a number and a date. I got neither of those two. Cell-C, I mean, pricing obviously always matters. Does a new telco on our market interest you? I mean, it's great to have a new listing, no doubt about that.
Yeah. So that's to me, it's currently the only positive. I'm not a holder of Blue Telecoms and not looking at Cell-C either. But again, it's another listing, and I think that is good for the JSE, and that'll be good for us. The question will be: is there space for another, let's call it, telco listing? Let's take the other question. Is this the right time? Yes, for sure. I mean, we've seen it in the share price today for Blue, and the market reacted because it's definitely going to unlock some value for the Blue Telecom holders. But and is the timing right? Yes, for sure. Look at MTN last month alone. I think it's grown 13%, and it's still one of the top 10 best performing companies on the JSE for 2025. And Vodacom is also within the top 20. Top 20. So it's a good time to be listing these companies. Will I be following this listing? Most probably not.
David, some Cell-C for you. I got to say, I think I side with Skulk.
It's not an area I'm interested in. It's just too competitive. You know, you talk about Optasia. I looked at Pepcor's offering, this flash. I mean, it's incredible. It's absolutely incredible offering. And credit to them, creating their own digital currency for informal traders. So a lot of this is happening. I think that Optasia is actually a competitor to Blue, to Cell-C, because they're offering platforms or black box, as Chantel explained last week, to people to buy time, cellular time and digital time and so on. And I think there's competition coming. And you've also got to understand, they're piling this onto you. Blue Label's got 7 billion odd debt or whatever debt, and says, okay, we can't handle it. Let's give it to the chaps out there. We'll give you a good marketing story, and we want your money. And that's what it comes to. It's a big gamble. But Skulk might be right. This might be a story. I don't know. I can't see. I'm too old and too risk averse. And believe me, I'm not risk averse. I'm not risk averse. But I
just wanted to say,
I like the story. If I'm going to be risky, I like the story, and I've got to be happy with the story. I can buy Nvidia.
Okay, you did risk averse, and the man goes and buys Nvidia. Let's go to some questions. Skulk, a question came through. Was it just last week? Anyway, the question is: does Skulk still like Sasol? It was your pick, like maybe a week or two ago. I can't imagine you're that much of a trader, and you're probably still liking it.
Yeah, just to recap for the listeners out there, we had this conversation exactly 2 weeks ago, and the next day the share price was up 17 over 17%. I'm retired. Just by the way, you can't see it's actually I'm sitting somewhere
You're
in
at the beach,
Bahamas. Yeah. My mark behind me. No, it's. I mean, yes, the share price reacted, quite positively. But I mean, be that as it may, as we stood here, the share price. Something like 10% higher. It's got 10 rand odd higher. It's still trading, as we sit here, at a forward P of 3.5 or 3.7 times, a dividend yield close to 3%. And when you look at, funny enough, this morning I looked at the target prices before we actually had that conversation. Most of the consensus was upbeat and positive on Sasol, and they had a target price of 167. And since then, they've actually increased the target prices, now trading at 170 rand. So even if we split the div, Simon, I mean, we're looking at a 50% upside potential if the analysts are 100% right. I'll take half of that. So yeah, I'm still a holder of Sasol, not planning to sell anytime soon. And it's one that's it's sort of a value play, and I'll be waiting for a re-rating in the future.
David, an old polluting chemical company for you?
A polluting chemical company, that's a problem. It's so difficult to read. It's a company that needs to spend a lot of money and effort getting itself right. I think this was we saw the first sign of that just the day before, the day after Shalk chosen. It's a worry. We don't know where oil prices are going. We don't know where commodity prices. We do need interest rates to come down. We need to go back to a stable period of growth, where we get good, steady economic growth. I think with the volatility that we're seeing in markets now, in global markets, it's so difficult to read the commodity markets. But I think Skulk's saying, look, this is a downside. What's my downside risk? It's zero. What's my upside?
Yep. Okay, we'll take that. Okay. Question coming on Redefine. Results were out Monday, and the question is, why the huge Redefine discount to its net asset value? So its NAV's about 60 billion, its property is about 100, but they've got 40 billion of debt. David, property companies in an ideal world should trade at a discount.
NAV is just, it's a number on the balance sheet, and I don't think you can value it. You mustn't take it that seriously. Look at the market price, because the market tells you what its properties are worth. And that's why I always respect the market. No matter, do you remember African Rainbow Capital? How they used to moan about the intrinsic value and how they were discounted and so, eventually they came and bought themselves out, but not at the intrinsic value at half price. Astoria is doing the same thing. Our intrinsic value is there, but we'll buy you out somewhere in the middle, So just be careful of NAV, and don't trade on it. Yes, it might give you some kind of idea, but I think the market's very smart, and the market values Redefine at based on the returns and yields and forward looking.
Yeah. Skulk, I take David's point. It's like a yardstick, and the market will trade it where it does, and it also gives us a bit of a margin of safety as opposed to 2017 when stocks, the properties were at premiums to net asset value, which, well, we know how that ended. Lots of tears for a long time.
Correct. We saw a massive implosion afterwards, and as we said to the listener's question, yes. As a deep discount. This is Redefine has been one of those companies been running a larger discount. They are more high debtness, so the leverage are a little bit higher. But as we sit here, the company is trading at let's call it a 33% discount to its NAV. If you turn the clock back two years ago, and it's like you said, we went from sort of 2016-ish. Where most of these property counters were trading at premiums, and it was trading at I think about 55% discount to NAV 2 years ago. So we've seen a solid improvement. So I think it's deepish, but there's a good reason. We've seen a great re-rating in most of these property counters. Again, last month being the top performing asset class that you could find, been one of the best over the past 2 years. And I would sort of agree with David. Just maybe a little bit of caution. Don't look at historic performances, and when I say historic, over the last year or two's performances, and put that as a benchmark. Do I think it's still a little bit deep? Yeah, maybe just slightly a little bit deep at 33%.
A question coming through around Naspers and Prosus, and the question is, should I buy Naspers or Prosus, or kind of they're the same and a bit of both? Skulk, there is some difference, but do you have a preference either or maybe a bit of both?
You know me, I'm a sucker for that word. My two favorite words is my first one is free, and my second one is discount. You know me, and the larger the discount, the more excited I get. So Naspers will always sort of excite me more. Let's call it a 39%. About a month or two ago, we've seen. It's because last year there was quite a bit of share buybacks, and Naspers did outperform Prosus. But this year it's been a bit other way around. So Prosus's discount remained round about, let's call it the 28% levels, while Naspers went from a 37% earlier this year to now trading at a 39% discount. So just on the back of that, I would tend to be inclined to rather buy the Naspers route currently going into the 10-cent trade, or than buying Prosus. But hey, if you can't decide,
how long has this been going on? How long has this discount story been going on?
Hey,
It's
it
like
was
Remgro.
55 a couple of years
I
ago.
don't know for how many years Remgro has been trying to close a gap, and that's all we talk about is the discount. It's never closed, maybe up to 15%, then goes back to 20, 30. And it's the same with Naspers Prosus. Just watch the price of 10 cents. You like it, you buy the two.
But David, this time is different.
This time is different. Not even famous words. David, question for you. If gambling gets restricted, locally clamped down, should I worry about my Sun International? Maybe switch to Southern Sun or City Lodge? Would you worry about their... Because they've got that, I can't remember what it's called, Sunbet.
Sunbets, yeah. You know, they've been pushing this hard. And Sunbets has been an incredible growth area for them, probably more so than the other sides of their gaming and hospitality. And the problem is if there is a clampdown, it doesn't mean that those gamblers on the phones who's sitting in the lounge, lounging, you know, watching football or cricket or anything, they're not going to go then and say, oh, we've got to get a bet on and get in the car and go to the casino. Yeah. That goes. So I think if they clamp down, which I think they should, government should, it's just out of proportion, sapping up so much disposable income, and it will hurt them. You know, it depends on how much they pull back, but I think all of those areas will be hurt quite dramatically. Do you want to go for for Southern Sun, which is nothing more than it's a property trust, remember, wasn't it hospitality? So I don't know if it's anywhere near exciting or City Lodge, but this is a good growth area, and it's a good growth area for government, but it needs to be controlled.
I agree with the needs to be controlled. Skulk, would you be worried about Sun International and their I mean, Sunbet's their fastest growing. It's not yet. I mean, it's big. It's just going to get bigger and bigger. Would that concern you?
Look at the reasoning behind these restrictions. They're trying to do two things. They're firstly trying to flush out these illegal operators. I think that's point one. And second point is to restrict the advertisement and these influencers and those kind of things. So that's the two things they're trying to clamp down. The one thing that Sun International does well is they're running legal operations, and they've got great casinos. And you know, if you flush out the one side, you could see a benefit. When I listened to the question for the first time, I sort of got this feeling 25 years ago where and I can have a similar question now with the restrictions that have come, you know, towards the cigarette market. Should I be selling my bets and rather buy ShopRite or Pick and Pay where I can buy the cigarettes? And we know now the answer 25 years later. It didn't matter. I mean, people still kept on smoking, and they will still keep on gambling. Unfortunately, that's the bottom line. All that I can say is I really think this is a good thing, these restrictions, and could be good for Sun International, not only bad, because it could focus, you know, on these legal operators and sort of benefit them as well.
Yeah, okay, I take your point. And get rid of those dodgy fly-by-nights that I see. If you're running an advert on a motorbike that is delivering my dinner to me, I am concerned. That is not a high-quality advert. But let's go to some stock picks. We had a question around any hope for SA clothing retail. Skulk, you're going to say yes because you got Mr. Price as your pick.
Well, this is not for the widows and orphans. I mean, I just want to make this really, really clear. I mean, every week we need to do a stock pick, and we now need to make a stock pick at what I feel is the highest in the market. When I look at Mr. Price, it's been one of the worst performing companies on the JSE for 2025 because they came off very big highs at the end of last year on the back of two pots and all those things. The company, as we sit here, is trading at a forward PE of 11 odd times. So it's one of the best ratings you will buy a company that's still trading at an ROE of around about, let's call it 25%. So it's a solid growth company. I think it's well managed, and you're buying it at, hey, there's the word again, you're buying it at a good discount. Forward dividends run about 4.5%. So yes, the T-bills and the Sheens, those are the threats, and that's one of the main reasons why we've seen this retracement in 2025. But I think it's a little bit overdone. And I do think, looking at the highs we're currently trading in the market, I think that might be an area where we buy a bit of margin of safety.
Yeah, gotcha. And I mean, to be clear, it almost doubled last year. So, I mean, it had had an insane year. David, you're going back to Ferrari.
They played down expectations at their investor day recently and came out with results that were ahead of forecasts and ahead of expectations. Also, the outlook for 2030 just remains intact. They control output. It's a cult type following, and whatever they produce, they sell. It's still an incredibly good company. It fell quite dramatically, but I think just put it away, you know. And it's one of those brands that just gets stronger.
Yeah. So, fun fact, you can buy a really good second-hand Ferrari for like only a little over $1 million. I did not know that. So guys, it was my birthday last week, if you're passing the hat around. But that's all for Stockwatch today. Thanks to our guests, Louw, PSG Wealth Old Oak, going with Mr. Price. David Shapiro, Sasfin Securities, he going with Ferrari. And don't forget to tune in next Tuesday, 5 p.m, as we'll be bringing you the JSE Stock Pick event, where you'll get inside analysis on some of the stocks that are catching the eye of the investor community. That right here on Business Day TV. Up next, the close.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.